I am, I won't even say a victim to routines. Guys, I embrace the routines because routines make me successful. Routines give me an edge, and routines get me in a position to where I can do what I do. And the first part of my routines every morning, when I'm opening my charts, when I'm getting ready for the day, that first cup of coffee is poured, is I go to forexfactory.com and I want to make sure that I'm not trading into news. I want to make sure that there is no high impact, no medium impact news coming out. And not because I have any concerns whatsoever about what they're saying, but it's because news can make the market spike, jump, bump. It can make it move too fast to trade. It can make it reverse out of nowhere from no areas because there's an emotional response typically associated with high and medium impact news. So every morning I'm looking. Today is Tuesday, August 8th. We had a little medium impact at 8:15. Guys, everyone can hear me? Yes? No? Yes? Gary will know to reboot. He's been around long enough. Um, but nothing really going on at 10 a.m. There's final wholesale inventories. It's going to be a medium impact kind of deal. Not really worried about it. And then I'm going to click over, same thing as I do, and I'm going to go to the education page, guys. And this is where everything that I talk about comes from. This is where, when we talk about rules, you'll be able to find those rules here. When I show you pictures, chances are you're going to be able to find those pictures here. And guys, I go through a very easy process. My goal is simplicity. My goal is to get you in a position where you have a plan, where you can execute a trade that wins more than it loses. That's it. Because show of hands, does everybody know how to use the little hand emoji? Show a hand. Who wants to win more than they lose, right? Who's in this to make money? Most of you should be. You don't have to do it. It's rhetorical. But the reality is that most of you are going to chase something that hasn't been proven. Most of you are going to chase something that isn't giving you the advantage. So I want you to take it back a step. I want you to embrace simplicity. And I want you to remind yourself that the whole goal of being a day trader is to win. The whole goal is to make money, to find that financial independence, to put yourself in a position where you're winning more than you're losing consistently every day. I guess he's forgotten. There you go, Gary, reboot. Um, and there's an easy way to get to that point, guys. There's a step-by-step process to becoming a confident trader ASAP, and it starts with posting your trades in class. This is the most often ignored part of the equation, guys. Post your trades in class, but don't just show me pictures and go, Mark, what did I do? Tell me why you did what you did. Even if you're not sure what the rules are, tell me why you took that long. Tell me why you took that short. Tell me what made you feel like that market was going to continue in the direction of your trade. Guys, this classroom is twofold. You post pictures, and I give you feedback on everything that you do. I give you feedback on every question that you have, everything that you do right. I praise you guys. I'm a big fan of positive affirmation, and I'm going to tell you how you did it right. But I'm also, and here's the part that some of you get a little upset about, I'm also going to tell you what you did wrong. And if I tell you what you did wrong in a trade, if I tell you how you broke a rule, how you forfeited an advantage, guys, it's not personal. It's not me and you having a fight or me telling you you're a bad human. It's me telling you I want you to be successful. I want you to be able to take these trades over and over and over again, and I want you to find success in everything that you do. So here's one of the pitfalls that you just stumbled into. Let's learn how to avoid it. And guys, this happens from posting your trades in class. The next thing is make sure you're spreadsheeting. Make sure that you're journaling. Make sure that every time you simulate a trade, it goes into this journal. And what you're going to do is you're going to come back tomorrow. Every trade that you take today, you're going to look at tomorrow morning. What worked? What didn't work? What made you comfortable? What felt forced? And what you're going to find is you're going to find patterns in the market that are bringing you success. You're also going to find patterns in yourself that are fighting that success, whether it's trading in determination conditions, whether it's just jumping in, hoping for the best. And this brief historical study each and every morning is going to prepare you for the day, guys. If yesterday I trade into termination conditions 4 times and 4 times I lose into a termination condition, today I wake up having seen that, and I write a giant note on a piece of paper in front of me that says, stop trading in determination conditions, silly. Um, and it makes me a better trader, and it's going to accelerate the learning, guys. So we're going to spend the first part of class learning the trigger line and Fibonacci rules for when it's okay to trade. And we're going to focus on a high probability trend trade. We're going to focus on a trade that typically wins 70 to 80% of the time. We're going to focus on a trade that only has 3 rules. Hey, good morning, Jose. And guys, these 3 rules give 3 advantages. And the advantages are momentum, a clear path, and an entry area. And when the 3 advantages come together, that's your recipe for a trade. Simplicity is key. We're going to keep those 3 rules on only 2 charts. You're going to allow a large chart to lead the way. The large chart tells you what's happening. The large chart defines direction, momentum, and areas, and your first 2 out of 3 rules must be met on that large chart. Because by the time you're done looking at 1 bar on a large chart, you're going to have the advantage of momentum, you're going to have the advantage of a clear path, and you're going to say to yourself, it's time to find an entry. That's where your small chart comes in. Your small chart is your entry chart. Your small chart is going to define that point where the market's most likely to continue, and you're going to use rule number 3, your entry rules, to get into the market because of the advantages present on the large chart. So guys, I want you to embrace the idea of simplicity. And I'm going to throw this out here again. I say it every now and then. If you're not making money consistently, if you are not making money consistently, if you're not winning more than you're losing, if you're not in positive equity almost every day, take a look at what you're doing. Are you chasing more trades? Are you looking at 5 time frames? Are you looking at 6 markets at once, hoping to catch every move? Or are you embracing the idea that a few great advantages can be your path to success? Guys, I can tell you, yesterday was the first day in months that I've traded the open. And I was over my goal, almost double, by 7:05 a.m. And I was over my goal with the exact same trades that I'm going to teach in this class. Um, it was easy. Played golf yesterday, ran around, got to play with my brother after the class and just talk. Guys, it can be easy, but you have to learn the rules. It's when the market opens, Ziba, 8:30 a.m. Central. We're going to learn the rules. I'm going to talk about the advantages. We're going to look at them on the charts. And the idea is that we are going to commit the looks to memory. We're going to commit those looks so that they become easy. I want you guys simulating. I want you on that one, especially if you're brand new. If you are brand new, I want you on that simulator, whether you know your rules or not, because I want you practicing and taking pictures and getting them in the room, and we'll talk about everything that you see. But I want you focusing on the correct rules as soon as you can, and I'm going to give you some tools to be able to do that, because when you practice the wrong trades, you're creating this muscle memory, and you're really setting yourself up for a long-term failure, right? Practice doesn't make perfect, but perfect practice makes perfect, is the old cliche. We're going to simplify, and we're going to simplify a lot, guys. We're going to keep it on a high probability trend trade. We are going to focus. That's okay. I will address it, John. I promise. And in fact, I'll put this picture in the room that I took this morning after your brilliant long that illustrates that gap. I want you guys to simplify. My approach to teaching this classroom has been one of simplicity. This classroom is designed to create a foundation for you guys that are looking for success. And this classroom focuses on that one trade, right? And then eventually we work our way into more trades outside of that high probability trend trade. But it's the foundation that the high probability trend trade creates that allows you to trade those other trades. Using market replay each and every day. Go back, practice, fix your mistakes, take more pictures, and repeat this process every day. And I took a picture, and maybe it's going to sound preachy, and I hope that it doesn't, guys. And I'm going to put this path in front of you. And Ziba, this kind of goes back for what you said, right? Guys, I want you to let your effort match your expectations. If your expectation is to be $1 million trader, let the effort that you put into the process getting there match that expectation. Back in a different life, when I was a personal trainer, I would say 9 out of 10 of my clients told me that they wanted abs, that they wanted to be able to see a six pack on their body. And when I told them how to do it, maybe 1 in 10 were willing to do the work. And they're like, but I want them. And I said, well, you've got to stop eating all the sugar. And they're like, but I don't want to. I said, well, then you don't get the results that you're desiring. So, guys, if your desire is to be a successful trader, I just put in front of you the path to get you there. Let your expectations and your efforts line up. So let's focus on this high probability trend trade, guys. I'm going to go to the tutorial section. And we're going to focus on a trade that typically wins 70% of the time, 80% of the time. We're going to focus on a trade that's going to teach you to read your indicators. Um, Ziba, it's possible that it was user error. And if you go to the user guide, it might have also been, it could have been NinjaTrader. There's those instructions, that quick video how to do it. Give it a try this afternoon. And if you run into problems again, then it may be a NinjaTrader error. Guys, your high probability trend trade is going to teach you to be a chart reader. And your chart reader is going to open up every door that you could ever hope to have open for you as a day trader. And chart reading involves 3 elements, guys. You're going to be able to look at your indicators and you're going to understand where the market is likely to continue. This continuation point becomes an entry, not only for the high probability trend trade, but as you expand beyond that high probability trend trade, it becomes your entries for HVA trades, for momentum style trades, for edge trades, right? Knowing where the market is likely to continue provides you an entry. You're also going to understand where the market is likely to go. You're going to be able to use Fibonacci. You're going to be able to use momentum, and you're going to have clear targets, guys. And these clear targets are going to allow you to get the most out of the trades that you're taking. And then finally, you're going to understand where the market is likely to stop, guys. And this is so important, twofold. The first thing is when you see an area where the market is likely to stop, that's a giant red flag saying no more trades into this area. This is an area that may create a bounce. This is an area that the people that move the market are going to react to. And this is an area that may spoil my trade. The flip side of that is that these likely to stop areas become anchors. And you're going to find yourself each and every trade asking yourself, where is the market coming from? These areas where the market is likely to stop is what we call a termination condition. And when a termination condition creates a full reversal in the market, this is how you get that highest probability trend trade, guys. This is the scenario that creates the highest chance of success. When terminations create full reversals, it sets you up and puts you on the path to taking trades that typically win more than they lose. So your first 30 days and beyond, I always encourage new users, focus on entries, focus on getting in at the best of the best spot, focus on nothing more than understanding those 3 advantages and putting those 3 advantages together to get that entry. And from those entries, from your chart reading, guys, you are going to find yourself a very competent, a very capable trader, and you're going to find yourself seeking out trades that win more than they lose. Now, these 3 rules, momentum, clear path, and an entry. Each rule comes together to create a trade, and the trade is the high probability trend trade. When you put these 3 together, guys, there's very little that you can't do, but it starts with momentum. It starts with strong triggers, that advantage of momentum. And momentum is really going to set the tone for everything. When you have momentum in a trade, I'm going to tell you right now, it will actually cover mistakes a little bit. We try not to make too many mistakes, but everybody does. And when that momentum's in place, it's going to help. But first, we're going to define trend. We're going to use the large chart, and we're just going to look at the background color. And we're going to say to ourselves, If the background is green, we're in an uptrend, and I'm only going to look for rules to be met for high probability trend trades long. If the background is red, we're in a downtrend, and I'm only looking for rules to be met for high probability trend trade short. Guys, that's going to be the first advantage that you give yourself, honestly, is just never fighting the trend. There's no reason to fight the trend. And then once that trend is defined, going to make sure that we have strong trigger lines. Strong trigger lines. There's two triggers, guys. There's the small triggers, which are the solid lines. There's two lines to the small triggers, and they work together. They act as one. And there's two lines to the large triggers. They work together. They act as one. So when the small triggers break above the large triggers and create space between the small and the large, this is what we call a strong trigger look. And this strong trigger look means that you have the advantage of momentum. When there is space between the small and the large, the odds are favorable for the market to continue in the direction of the trend. This is your first advantage, guys. When you have that strong trigger look here in an uptrend, this is the most favorable look for buying a pullback to Fibonacci support on that smaller, faster chart, on your entry chart. And what you'll see is one bar on the large chart is going to define the trend with a green background. It's also going to define momentum with those strong triggers. This tail or this wick is that smaller, faster chart pullback, and you're going to learn how to take an entry right at the bottom of this tail. Small triggers below the large are wide, they're angled in the direction of the trend, and it's the space created between the two in this downtrend that lets me know that the market is likely to continue in the direction of that trend. This is also the most favorable look for selling a pullback to Fibonacci resistance on that smaller, faster chart, and you're going to see that tail once again. And you're going to learn how to utilize this bar on a large chart and whittle it down to an area on a small chart, and you're going to find entries right towards the tip of that tail. And odds favorable momentum, guys, it has to set the tone. You're going to look for opportunities from the point where the small triggers separate until they return, and that's going to be the area that creates the highest advantage for you looking for these trades. You'll see there's two of those wicks or two of those tails in the uptrend. The market continues in the direction of the trend until the small triggers work their way inside of the large triggers. And this is the exact opposite of strong. This is what we call a weak trigger look. And when I have a weak trigger look, anything can happen up or down. You're going to hear me in the class all the time. Did you have odds favorable momentum, or did you have those anything can happen triggers? Because associating the loss of momentum and the weakness with anything can happen, it helps your brain sit on their hands a little bit and just be patient. You're going to see this loss of momentum a lot before a turn, and then you're going to end up with that odds favorable momentum again. And there's those tails, once again, those best of the best opportunities to get you down to maybe the next key Fibonacci area. Odds favorable momentum is not going to happen all day, every day. Odds favorable momentum is something that you have to be patient, that you have to wait for. The market may be moving down and the triggers weaken into that anything can happen state. And look how it precedes the reversal in the market, probably Fibonacci support right down there. But weak triggers take trades off the table. The market reverses. We get that odds favorable momentum. There's one of those tails. And look how it continues all the way up until they weaken once again, right to where the market reverses. Creates that odds favorable, pushes down again. And then we get what we call a little bit of indecision here, guys. This is that fight between buyers and sellers. This is that fight when the powers that be, one side wants it to go up and one side wants it to go down, and you'll see these trigger lines not agree. You see maybe a green background but red triggers, or you see the large triggers are up and the small triggers are down. And it's this indecision. It's a transition phase. Let the fight happen. Next-gen users, you have the advantage of never getting caught in consolidation, because when the trigger lines aren't their absolute strongest, you're just not looking for a trade. And this is where a lot of new users are tempted to predict which side is going to win. Maybe the buyers will win because the background is green, and the other half of you will say, well, maybe the sellers will win because my trigger lines are red. And typically you find yourself 3 or 4 trades deep in the indecision, and you're frustrated and you're angry, And then when that market finally gives momentum again, you miss the trade because you're so beat up from the consolidation point. So guys, commitment to odds favorable momentum in the beginning, making sure that you have the absolute best of the best, those strongest triggers, because it's those strongest triggers that are going to give you the advantage of momentum, and that starts everything. Can you guys give me a why in the room? I know I have a lot of you in here that are kind of new, and this is going to be the easiest thing that you ever look at in the market is odds favorable momentum. Is everybody comfortable with the idea? Strong trigger lines lead the way. If I take everything off of this chart except trigger lines, and you can do this on your charts, strong triggers push down, they weaken, we get a little bit of a push, small's on the wrong side, proceeds the reversal. Strong triggers, there's a tail, and the market continues back up. And if you just scroll back, you're going to see this over and over, and you're going to see that there isn't always an advantage. But when those trigger lines begin to accelerate away and you do have that strong trigger look how the market continues down. Guys, this is the first step in the process of looking for a trade. Here's those weak triggers, smalls inside, and look how the market is pushing down. Look at the difference between the tail that continues and now that's trying to create a reversal bar. It's an easy advantage to recognize. You're going to want to go back and study it a little bit. You're going to want to practice this look because when you have the advantage of momentum, it's going to be time to make sure that you have the advantage of a clear path. And a clear path is only there when termination conditions are false, when we have not reached an area where the market is likely to stop. Once again, I'm going to go right back to the tutorial section, and we're going to talk about termination conditions. And what they are is a Fibonacci-based indicator that may reverse the market. It's a Fibonacci-based indicator that may create a bounce, that may make that direction untradeable because that's where the institutions, that's where the guys with 1,000 contracts are taking profits or entering trades. And the areas that may create a bounce, that may behave as a termination condition, are going to be a divergence high line, and that's that magenta line that prints off a pivot when there's a loss of momentum. It could be a divergence low line. It's a cyan line that prints off of a pivot when there's a loss of momentum. It can be yellow 1-to-1s, red Fibonacci resistance, blue Fibonacci support, and in some cases it may be that midband that runs through on your large chart, and that's that gap theory that John was talking about earlier, and we will definitely cover that. But what we're going to do is a simple recipe to determine whether or not we've reached a termination condition. Whoops, I wanted this chart. It's going to be a comparison, guys. It's a comparison of your T3 trigger lines in the area that's been reached. So two things have to happen. The first thing is that price reaches an area. These dynamic Rinko bars come down and reach Fibonacci support in this particular picture. When the price reaches support, all you have to do is ask yourself is where are my triggers? If all of your triggers remain above support, the area is considered a termination condition. It's an area that may create a bounce. It's an area that may stop and reverse the market. But what it is it's no longer a clear path, and you have to sit on your hands and be patient. Either the area will break, meaning that the trend will resume to the other side of that Fibonacci area, or this area will create a reversal in the market. And in the moment, you have no idea which one it is, and this is that patience piece for trading. Price reaches the area, triggers don't break, it's a termination condition. Well, when is it no longer a termination condition? Good morning, Debbie. If price reaches support up here, hopefully you can all see my mouse wiggling there. This is an area that has the potential to stop the market. This is a termination condition. When both your small triggers, both lines of the small triggers, and your large triggers, both lines of the large triggers, get below Fibonacci support, it begins to behave as resistance. We call this area broken, and now the path is clear. So it becomes this pretty simple comparison in the beginning. Price reaches an area. If the trigger lines don't get to the other side of it, the area is not broken. There is no clear path. You have the advantage of recognizing this area and just sitting on your hands and being patient, waiting to see if it breaks or if it reverses. When both the small and the large triggers get to the other side of resistance, now resistance is broken, it begins to behave as support, and there's one of those tails with that odds favorable momentum. Now that path is clear. Now it's time to look for the rules to be met for a high probability trend trade. Simple process, and I'm going to share these pictures with you. So termination conditions at a high. The recipe stays the same no matter what the area is. If this pivot forms and divergence prints on its own, it's not a termination condition. It's just a loss of momentum in the market. But price reaches the area, reaches that divergence high, that magenta line. All of my trigger lines remain below. Now I have a termination condition, and this is called a pivot stop out of a divergence high. And it's a powerful termination condition, and it may reverse the market. If this termination condition reverses the market, we're going to call that termination condition a strong top. And a strong top is the precursor for the highest probability trend trade that you can take. Trend trades that happen after a termination condition that create a full reversal are your absolute best chance of success. Price reaches resistance, triggers remain below, no more long trades even with that odds favorable momentum. Price reaches one-to-ones and resistance. All the trigger lines remain below. This is your giant red flag that says, hey, no more long trades. Let's sit on our hands. Let's wait. Let's see what's going to happen. And the same recipe is true going the other direction, guys. This is your termination conditions at lows. I spend the most time on termination conditions because this tends to be the one that new users like to ignore the most. If price reaches these one-to-ones and all of my trigger lines remain above, I'm at a textbook termination condition. You could teach a class with this picture, right? No more short trades, thank goodness, because look at the bounce. And when this termination condition creates a full reversal, we now have a strong bottom in place. And this strong bottom is the precursor for the highest probability trend trade that you can take. Price reaches support, no trigger lines break through, no more short trades, guys, and this happens all day long. Here's the pivot, price reaches that pivot low, now it's a termination because the triggers stay above. There's that pivot stop out of a divergence low. And once again, I'm just going to bring up price reaches support. Look at the bounce. We hold and we wait and we decide whether or not it's going to hold or break. Right off of Fibonacci resistance. There's one of those pivot stop outs. There's another one of those pivot stop outs. Guys, you have the advantage of seeing clearly where that market is likely to reverse and not trading into these areas, keeping the powder dry, so to speak. And that was crude oil. It happens on every market. It happens on every time frame. Guys, there's where those weak triggers that we talked about. Notice how they coincide with the Fibonacci area, and look at how the market is pushing down. You have a giant clear-cut red flag saying just be patient. Let's see if it breaks, or let's see if it reverses the market. So guys, I'm going to ask, is everybody okay with that simple recipe? Price reaches the area. If no trigger lines break through, just going to sit on our hands. Let's wait and see what happens. In this picture, price reaches support, no triggers, no trade. Resistance. Back to support, no triggers through, no trade. All the way up to resistance. There's one of those pivot stop outs of the divergence high coinciding with Fibonacci. Creates a full reversal, which gives me a strong top, which has odds favorable momentum, which gives me a tail. That highest probability trend trade that zooms it off to the distance. Brand new users, I know I have a lot of you in here. I should have a Craig, a Jason, a Wells, an Andrew, a Ty, Stock Chip, T. Copeland. How we doing on this concept? Guys, we're creating a foundation. We're creating this solid, unshakable foundation to give you the ability to recognize advantages in the market. One last termination condition, guys. Sometimes the market reverses from nowhere. Quiet classroom today, that's cool. Hopefully you're trading, making money. But if you need these rules, guys, participate. Sometimes we have a clear path and the market turns, and sometimes you have a clear path and odds favorable and the market turns. This final termination condition is the only termination condition that I'll look for on a small chart. It's the only termination condition that I give any credit on a small chart. Drinking from the fire hosey? Yeah, it is a little bit. But that's okay. I promise you. I do the same thing every day, guys. The same hour is the first hour every day, and it's the reinforcement of the rules. And then we're going to spend 2 hours looking at the market, 2 hours looking at your pictures, and everything that I talk about is going to work its way back to these rules, back to these advantages. So let it be simple. And I know that you're like, man, there's so much going on, Mark. How could it possibly be simple? I'm going to show you. This is my path picture for you guys. So E, as you drink from that fire hose, your first goal, everybody in this room, your first goal is to be able to recognize the trend. Is it up? Is it down? And boom, everybody in this room already has that color coded. Your second goal is to recognize strong triggers. That typically happens on the first day. After you have the trend and you have strong triggers, you're going to start going through that path of whether or not the termination condition is present. And most of you are going to take 3 to 4 days to just study, repetition, take some pictures, ask some questions. By the end of the first week, most of you are going to be pretty comfortable with the idea of what creates a termination condition. And to be honest with you, most of you are going to ignore it in that first week too because you so desperately want to be in a trade. And then finally, the fourth piece of the puzzle is going to be entries. So I want you to allow yourself to be new. I want you to give yourself a little bit of time, and I want you to understand that it is sequential. When you establish the trend, you must gauge the momentum, and when you have momentum, you have to have a clear path. And when you have a clear path, well, then we look for entries, guys. And your whole first 30 days revolves around taking an entry in this little shaded box. So don't rush the process. Be okay with being new. Trust, and I wanted to throw that out there, guys, because I've been new as well, and I rushed the process. So I'm trying to keep you guys from doing what I did because I can tell you right now it didn't work. All right, final termination condition that we're going to talk about is a small chart termination condition. It's a 5-1 termination condition on crude in the S&P. It's a 13-2 termination condition on the NASDAQ. But what it is 3 divergences in the same price range. 3 losses of momentum where this cyan line prints from a low or this magenta line prints from a high. 3 divergences may terminate the trend. Notice that I use the word may. It may terminate the trend. It becomes even more powerful when your small triggers work their way inside of the large triggers, guys. Here's that foundational lesson coming back to help you in the next stage. When your trigger lines go from odds favorable to anything can happen, you're losing momentum. You can see it visually. When you coincide that with 3 divergences, it becomes even more likely that the market may reverse. And then when that third divergence is higher than the previous from a low or lower than the previous from a high, well, now you have a head and shoulders pattern, and it adds more fuel to the fire that that market may reverse or at least bounce enough to take you out of a potential trade. Guys, you're going to see these 3 divergences on your smaller, faster chart. Remember, the large chart is a 1-bar affair. The smaller, faster chart is going to show you that change, and you'll see this look from a low or this look from a high when your large chart may be changing direction before a key area is reached. This is going to help you see it happening sooner than the large chart will tell you. It's also going to become a great tool for management as you get into taking these trades and learning to manage these trades. Because if you are in a trade, let's say hypothetically, I'm in a short trade, and 3 divergences print, well, this is my indication that it's time to get out, it's time to take my profits, and it's time to wait for the next best situation. So 3 divergences in the same price range is going to help you identify potential turns in the market before you see them on the large chart. And then one more time, just for repetition, guys, price reaches 1-to-1s. no trigger lines break through, we have a termination condition. There's absolutely no more short trades. When this termination condition creates a full reversal, the triggers go from red to green, I end up with odds favorable, I have a clear path. There's another one of those tails that's that highest probability trend trade, that best chance of success for each and every one of you as a new user. So how do we catch the tail, guys? Well, we don't. We don't catch the tail at all because that's a large chart scenario. Remember, when I have momentum, when I have a clear path, if I'm in an uptrend, this is what my small chart's going to look like. And the small chart is a refinement process. It's taking that broad stroke of a brush that the large chart provides, and it's literally whittling it down to an area inside of favorable large triggers, and this becomes your entry. You'll notice I put a black box around just one bar. All of these bars on your smaller, faster chart are this one bar on the large chart. This is how we're going to be able to reduce risk. This is how you're going to be able to maximize your profit potential. And you're going to do that with a simple refinement process. When everything says up on the large chart, the momentum, the clear path, you should have strong triggers on your small chart. You should also be focusing your attention on the large triggers and your synthetic triggers, and they should be what we call favorable large triggers, meaning that the large and the synthetic on your small chart are overlapping. They're one on top of the other. This is your highest chance of success. This is when the market is its strongest with that odds favorable momentum. And by having these trigger lines one on top of the other, you're going to create the smallest window of opportunity. And the smallest window of opportunity is the least amount of risk. And that's exactly what we're doing. We're managing our risk before we manage our profits. And we're doing that with the refinement chart. Everything says up. I'm identifying my favorable large triggers, and I'm looking for the areas that may fall within. Every high probability trend trade comes from a line, and those lines can be mid-bands, they can be fibs, or they can be yellow one-to-ones. And these areas create a bounce point. And rule number 3, your entry rule says that you're going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers, which means that you're going to literally wait for the market to come back to you. And you're going to wait for it to come back to you at one of these areas, fibs, mid-bands, yellow one-to-ones, and those areas are going to be inside of favorable large triggers. So to get that pullback, that little retracement in price, we're going to wait for a reversal bar on our 5-1 chart. When everything says up, we're going to let the market push down. We're going to let a small group of people fight the trend or maybe take profits. And you're going to get this reversal bar and you're going to create a window of opportunity. And your window of opportunity is going to extend in a long trade from the highest point of support inside of favorable large triggers to the lowest point of support inside of favorable large triggers. Or if we're looking for a short trade, it'll be from the lowest point of resistance inside of favorable large triggers to the highest point of resistance inside of favorable large triggers. Your job as a Nexgen rules-based following user is to right-click on your chart at the top of that window, the top of the window of opportunity, and activate a limit order, saying that I will buy the market if price comes back and reaches my limit order right at the top of that window. And at that point, there's nothing for you to do other than sit on your hands and see if price pulls back. And if it does, your limit order is waiting right there at 79.21, right there at the highest point of support inside of favorable large triggers. And you're now in a long trade, and you're in that long trade with the advantage of momentum, with that absolutely clear path. And now you have your entry area, the point where the market is most likely to continue. And you let the large chart lead the way, because the large chart's the opinion of the large crowd. The large chart is defining areas. The large chart is defining momentum. And once you had that, you let this small crowd, this little group of people fight everything that the market said that it was doing, and it pulls you right back to your perfect entry, right back to that point where the market is likely to continue. and you're in that trade at 79.21, guys, and your protective stop, because we manage risk before we manage profits, is going to go just outside of that window where the market shouldn't go. Because if the market extends beyond that window of opportunity, well, that's not a trade that we want to be in anymore. But while our entry is at the top because of the momentum, I want you to mentally be prepared that that market may push to the bottom, which means that your stop has to go beyond that lowest point of support. Anything that wins 70 to 80% of the time is going to get stopped out 20 to 30% of the time, and that's okay. It's a normal part of a positive equity curve is losing that trade. But this is a trade because of the advantages that I take 1,000 out of 1,000 times. Guys, I will never miss this opportunity because this is a trade that typically wins 70 to 80% of the time. This is your high probability trend trade. This is your foundation. This is the trade that's going to teach you to understand where the market is likely to continue, where it's likely to go, and where it's likely to stop. This is the trade that chart reading is going to take you to other trades beyond this high probability trend trade. This is the trade that for your first 20 days, guys, I want you focusing on nothing but the entries, making sure that the rules are met, making sure that you have the highest chance of success. And I'm going to give you some tools to do that. And the first thing is this high probability trend trade checklist. If you print this out and put it on your desktop, guys, every time you take a trade, make sure that you're following these rules. And I've never had anybody in the history of the checklist do worse than 70%. And I know that a lot of you in this room have said, I want to be consistent. I'm going to stick to this checklist. And you do it for about a week. And you have success for about a week. And then you decide that it's time to branch out, right? And that's when the typical trade falters. When I was training managers in a previous life, we referred to that, I know it's not a nice word, we referred to that as a 30-day stupid. You're going to do everything in your power to do it perfect for your first 30 days. And then you're going to begin to form opinions. And a lot of you are going to be tempted to ditch the checklist that brought you success. Keep it simple. Embrace it. Guys, 70 to 80% winners, it's difficult to not make money. And this is nothing more than entries, getting you in at the absolute best spot. The next thing I'm going to give you is the exact same checklist, once again, with pictures of what everything means. What is a good top or bottom? Well, it's a termination condition that creates a full reversal. And these are my odds favorable momentum, where the market is most likely to continue in the direction of the trend. And these are my anything can happen triggers that removes that advantage of momentum. And these are my termination conditions and how to identify them right in the moment. And here's those windows of opportunities, defining where the market is most likely to continue. Guys, this should be on your desktop. Brand new users, you should look at these pictures. So here is every lesson in a snapshot on each one and the words that go with the picture. This is a great tool for new users to simplify a little bit. And guys, this is your path for the first 20 to 30 days. Managing your entries, learning how to get in at the absolute best of the best spot, and then creating a plan that is rooted in consistency, creating a plan that is proven, that is repeatable, that you can go back and back test so that you can remove doubt, so that you can remove mistrust, so you can develop trust and be able to take this trade every time it sets up. And the final thing that I'm going to give you guys is the simple plan for consistency. Your whole trade plan as a new user can be summed up in a third of a sheet of paper, and it begins with all caps and underline. Never fight the large chart direction. Never fight the large chart triggers, guys. If you're never fighting trend, if you're never fighting momentum, it's going to remove, I would say, 60 to 70% of the losers that the average user takes. It's pretty simple. If it's green, go up. And if it's green, there should be separation between the small and large. When you're coming from that termination condition that creates a full reversal, it adds a little giddy up to it, guys, but it's not mandatory if the three rules are met, if the three advantages are in place. Odds favorable, no terminations, area for entry, guys. When you mark yes, get into that trade no matter how you feel, no matter what you think, no matter what your gut tells you. Get into that trade. And every great entry creates a manageable trade. Every great entry reduces risk, and every great entry creates an opportunity to make money, even if it's not a full winner. So I'm going to slide this over to the other page. 20 days, 20 trading days of great entries, guys. 20 trading days of getting in at the right spot. I want you to show me every entry you take. And then great entries need to be managed. And the easiest way to manage a trade is methodical and pragmatic, the same way you're entering the trade, guys. Something that's testable, that's proven, that doesn't require opinion or emotion. So your initial stop, remember, goes outside of that window of opportunity. It goes where the market shouldn't go. And when you take the perfect entry at your area of resistance inside of favorable large triggers, your stop goes beyond that highest point of resistance. It goes up here where the market shouldn't go. And if the market continues up, you're going to get stopped out. And this is just the cost of doing business, 20 to 30% of the time. Every 10 trades you take, I want you to be mentally prepared to lose 2 or 3 of them. And it's okay, but you don't get to pick which ones. So we manage our risk every time. One of two things are going to happen. You're either going to get stopped out, you're going to take that small loser, you're going to dust off, and you're going to wait for the next opportunity, or the market's going to go in the direction of the trend, in the direction of the momentum. And it's going to give you that reversal bar in the other direction, at which point you will move your stop 2 ticks above that reversal bar, or if it's a long trade, 2 ticks below. And what you've done is, once again, you've managed your risk. You've gone from 12 to 14 ticks risk to about 7 or 8 ticks risk, right? You've saved $100 of risk on that trade. Everything is happening the way it's supposed to happen. And at this point, there's nothing to do. It either is going to hit that small stop, right? You're going to lose a couple bucks, or it's going to go to your first target. So you're going to do nothing except let it play out. If it reaches your first target, whoops. If it reaches your first target, come on and open for me. Your first target's $100, guys. If I get an entry, then my stop is outside the window. If I get a reversal bar, then my stop is above the reversal bar. If the market reaches $100 in profit, then I exit on my first contract. I have $100 in the bank. I've got a dopamine kick. I have confidence through the memory of success. Guys, you won't believe how good $100 feels. And then I'm going to move my stop to break even. And once again, there's only 2 things that can happen. Either I get stopped out break even, which is no big deal. Who cares about losing nothing, right? Or it goes to my second target. And if it goes to my second target, that predetermined pragmatic approach, guys, that's a $200 profit target, which means on a 2 lot, I just made $300. From the highest probability trend trade, from the best entry, from the least amount of risk, I'm $300 up. And I'm going to tell you, if you stop your day at $300 every day, it's a $1,500 week, guys. It's a $6,000 month, which puts you at an extra $72,000 in your pocket, right? Before taxes. But everything is pragmatic and everything is methodical. And everything revolves around great entries. And I want you to let everything revolve around great entries. Let it revolve around 3 advantages. And what you're going to find is you're going to put yourself in a position where you can come through and you can read your charts, that you can come through and you can gauge these advantages. And I'm going to come back to the market and we're going to look for one of those tails, right? We're going to look for one of those. Let's get rid of all the noise. Let's see what it looks like. This is your study, E. This is how you're going to study. Craig, this is how you're going to be able to study. Jason, Wells, Andrew, Ty, Stock Chip, T. Copeland. This is how you're going to be able to study this look. I'm going to go to my templates, and I'm just going to put those triggers on there because I don't want new users getting confused with all the noise. And I'm going to look for odds favorable momentum, and I'm going to look for one of those tails, guys. And if I circle that tail, at 8:49 a.m., I'm going to scroll back on my smaller, faster chart, and I'm going to see what it looked like. And that pullback was right to an area inside of favorable large triggers. Does everybody see it? Odds favorable, nothing in the way. Here's my pullback. There's my area of support inside of favorable large triggers. Would you guys like to do an entry together? What's it going to look like real time? Nobody? I love a quiet crowd, guys. Thank you, Johnny Rocket. Wander, let's do it, right? So everything starts on the large chart. My background is green, therefore I'm in an uptrend. That's the easiest thing you'll ever do, right? I know that I'm only looking for rules to be met for high probability trend trades long. So Wander, Johnny E, Big O, guys, odds favorable momentum starts the path. Odds favorable momentum is the first advantage that I need to have, and it comes from strong trigger lines, which mean that my small triggers must be away from, separated from the large, wide angled in the direction of the trend. Do I have strong triggers in this instance? Does everybody recognize it? Give me a Y if I can go on to rule number 2. Absolutely. Guys, that's the easy one. You guys are going to be great at this inside the first couple days. Next, I have to make sure, and I want you to go through the recipe. In order for there to be a termination condition, price, the top part of this bar, must reach an area. Can you see how there's no fibs? There's no one-to-ones. There's no divergence highs. So does everyone see how price has not reached an area? Therefore, there are no termination conditions present. Everybody comfortable with that? And guys, keep those Ys coming. Let me know you're there. And if you need more, let me know. So I have odds favorable momentum and I have no termination conditions. Watch this. I don't need it anymore. I'm going to turn my attention to my small chart. And on my small chart, all of my bars are up. My triggers are strong. They're one on top of the other. And everything says up. And guys, this is where new users are going to say, oh my gosh, it's going without me. How am I ever going to make money? The market's already gone. And this is why we study. Because what you're going to find is that the market repeats itself over and over. And that market's going to continue up. And I want you guys looking at these favorable large triggers and looking at the areas that may fall within. I have Fibonacci support at 80.24. I have a mid band here at 80.20, but I'm waiting for a pullback. I'm waiting for a little reversal in price to get me to one of those areas. And as the market continues up, what I need is the reversal bar. And there it is. Let's create our window of opportunity. And I'm going to use drawing tools to do this, and you can use drawing tools as well. From the highest point of the triggers to the lowest point of the triggers is where I'm looking for areas. Give me a Y in the room if you're with me. I know that my areas have to be somewhere within this yellow box. Everybody good with that? Watch how we can refine where the market is likely to continue. From my highest point of support, which happens to be a midband, to my lowest point of support, which happens to be that fib. Look at how small the box became. At the time of this reversal bar, I create the box, I identify the areas, and I'm going to put an entry. Two or three ticks above that highest point of support inside of favorable large triggers. And guys, this is a limit order. I'm literally waiting for the market to come back to me. If it comes back, I'm in a trade. If it doesn't, I'm not. Let's see what happens. The market, the market's going without me, isn't it? New users are going to be tempted to jump in right here, and they're going to say to themselves, oh no, it didn't come back to my area, but everything says up, and I'm going to get in at 80.47. And then the market is probably Going to do exactly what the market does. There's your reversal bar, up, and once again, fluctuations. It's difficult to manage these trades without a pivot to put it behind, and then it comes down again. Look how the window changes as the market goes up. And that's the one part that I didn't do in the mid. I still have a mid band inside of favorable large triggers, but it's not down here at 24. Everything says up, and I have to be patient, and I have to wait, and I'm going to follow that market, and I'm going to wait for the advantages. And now my order's at 80-40, not 80-25. But on my large chart, I still have odds favorable momentum, and I still have no terminations. And see how the top of the bar at 56 is my highest pivot right here at 56? And the market comes down, and it reaches my area of support inside of favorable large triggers. And I'm now in a long trade. I'm in a long trade with the advantage of momentum. I'm in a long trade with the advantage of a clear path, and I'm in a long trade with the advantage of having entered the market where it's most likely to continue. I'm going to put a stop outside of that window where hopefully the market shouldn't go. And it got me. Your job as a brand new user is to locate that entry. Your job as a brand new user. Well, Johnny Rocket, typically you're going to go into a trade with 12 to 14 ticks. I'm more interested in the entries, guys. I'm more interested in you finding the entries and recognizing the point where the market is likely to continue. And I'm interested in you being able to sit and be patient and wait for that best of the best entry. And what this market does with the momentum, what this market does is ultimately it goes off to its target. Once you learn how to take this entry, you're going to learn how to manage this trade. Once you learn how to take this entry, you're going to be able to reduce risk. You're going to be able to maximize profit potential. But this circle turns into a study. And it gives you an opportunity. And let's see if we have one happening in the moment. This is crude oil. I'm going to get to the live market real quick. Well, price reached one of those divergence highs, but let's go through the process anyway. Here's a termination condition. It creates a full reversal. I have odds favorable momentum, but I do have a divergence high. It was an entry, Shogun. You can't get stopped without an entry, right? What that market did is it bounced. The only thing that we were looking for, Shogun, was an entry on that trade. We weren't concerned about anything beyond that, really. That was an opportunity for me to show you guys how to identify. That's why I took the fibs and everything off, so that we could focus on the advantages and work on the entry. Guys, at the time of a reversal bar, if it happens, you can identify your highest point of support to your lowest point of support. But here I'm into that divergence high. I'm waiting for a reversal bar. But guys, do you see how this happens? This is the part that I'm trying to get into. Not that the 5-1 conditions weren't met, Shogun. You didn't completely have a clear path. Your small triggers have broken through, but your large didn't. So for the average new user, this would never be a trade. But for the sake of education, of being able to identify a window of opportunity, I eliminated the challenge of rule number 2 so that we could focus on the idea of recognizing the point inside of favorable large triggers so that you can create an opportunity of recognition and find your entries, because entries are what you find first so that you can work on management. Does that make sense, Shogun? Without the benefit of fibs, everything says go. The second I put my fibs back on that chart, it's a different approach to the trade. And it no longer is a high probability trend trade. It becomes a medium probability trend trade because I don't have a clear path. Because my smalls and large aren't through the resistance yet. It hasn't become support, which means that this divergence may push us a little lower. So there's more to it, Shogun. My hope for you guys was to be able to identify that price loves to pull back to support inside of favorable large triggers. Do you see it? Odds favorable. Larger up, smaller up, separation. 81.14 is off in the distance. There's a reversal bar, and price pulled right back to yellow 1-to-1s inside of favorable large triggers. That's all I'm asking is for you guys to focus on for the first 20 days. Be able to take this entry at 91. There's your reversal bar, which means that your risk is in place. It's about 5 ticks of risk. From 91, 80, 91 to 01, guys, there's your $100. It is a 50-50, Jose. But we're only talking entry right now. So guys, those of you that are brand new, you're hearing these guys say, well, Mark, isn't that a 50-50? Mark, the path isn't completely clear. And they're absolutely right because we're at a divergence high and both the small and the large triggers have not broken the area. Guys, we're focusing on entries for 20 days. For 20 days, we're learning to believe in the advantage of momentum. For 20 days, we're learning to do nothing more than identify an area of support inside of favorable large triggers so that you can take the most manageable trade. Give me a Y in the room if you're with me on that one. This first hour is dedicated to simplicity, guys. Finding these entries, not concerning yourself with all the other noise going on in the market. When you learn how to find these entries, when you learn how to recognize the areas of support inside of favorable large triggers, the areas of resistance inside of favorable large triggers, that's when your plan grows. That's when you begin looking for more trades, when you've established this foundation. And the first more trade that you look for is what Jose just said. It's a 50-50 trade. And it has nothing to do with your chances of success, guys. Here's my potential termination condition, this red Fibonacci resistance. 50% of my trigger lines have made it through the area, right? In order for an area to be clear, both the small and the large must break it. 50% of my triggers remain below. 50-50. Make sense? You could call it a straddle trade. You could call it a one above, one below trade. You could call it a both triggers aren't through the area trade. We just happen to call it 50-50 because it's easy to type. Guys, this is an area with the potential to break, but it hasn't broken yet, which means that you don't have a clear path. Price reaches, no triggers, no trade. Small and large break. See how resistance becomes support. We now have a clear path. Guys, this is the potential to break because of odds favorable momentum. And let's look at crude again. The potential to break because of odds favorable momentum. You have forfeited the clear path. Because you forfeited the clear path, you should have a small window of opportunity. You should have odds favorable momentum on that smaller, faster chart. There's no reason if you've given up a clear path to forfeit momentum or an entry area. Abdulaziz, you came back to this classroom because you rushed the trades. You tried to trade everything instead of the best. Abdulaziz, can I be honest with you and the rest of the class? I did the exact same thing. Guys, when I started off exactly like you. And to be honest with you, I was probably in a worse position because I had no knowledge whatsoever of the markets. And when my brother told me that I could go short, that I could sell the market, it took me 30 days to wrap my head around the idea that you can sell something that you don't own because of the commodities market. And I literally struggled with that for a long time, and I could never see short trades because I couldn't do it. What I'm telling you guys is that if you get great at these entries, it didn't make it, did it, Jared? So let's go through it. So Jared, what's the momentum like on the large chart? Would you say that that is strong? All right, so Jared, if I have a 2 million ton train moving this direction and all of that momentum is in that direction, how hard is it going to be to stop that train? It's going to be difficult, right? This is the analogy that helped me do it. Everything says up. There's nothing in the way. Jared, this is the expressway going full tilt boogie in the direction of home. So when we make our window of opportunity, remember when I said from the highest point of support to the lowest point of support inside of favorable large triggers? Are you with me on that? You identified your window, right? But you chose to put your entry at the mid band. Maybe because you didn't want to see it run you over a little bit. Maybe because you were afraid that if you got in up here, you didn't want that risk. That's pretty normal for new users. But Jared, our entries go at the top of the window of opportunity, and they do that because of this momentum, because of this clear path. Does that make sense? The idea is that we have so much momentum and nothing in the way that we just don't expect it to go to the bottom as often as it bounces off the top. This one-to-one, it's like a brick wall and you're throwing a tennis ball at it and everything is screaming. So we're entering at the top. Now, this is a great question because this is a super common mistake. Because with all that momentum, we want to make sure that we don't miss our move. We want to make sure that we get our trade, right? And guys, look what it did with that momentum. It went right to Fibonacci resistance, right to our target. Absolutely. And this takes trust, Jared, and this takes repetition, getting in at the top. Guys, look how Fibonacci resistance stopped the market. Look at the bounce that it's creating. Look at the three divergences in the same price range with weak triggers. If the red line alone wasn't enough to get you to stop taking long trades, hopefully multiple divergences were. But guys, give me a Y in the room if you see how your entry at a mid-band inside of favorable large triggers just got run over if you tried to trade into a termination condition. I'm telling you, termination conditions will save your bacon and keep the powder dry. And let's go through some of all my new users. This is that same drill that we just did. If you circle the tail when the rules are met and it lines up with an area inside of favorable large triggers, you know you have a high probability trend trade. You create your window of opportunity inside of those favorable large triggers. Exactly, Shogun. And guys, this is why I say embrace the rules and write them on your charts. Pull back to an area inside of favorable large triggers, right? That's the verbiage for rule number 3. Pull back to an area inside of favorable large triggers. And Shogun, that's exactly what it did. It pulled back to an area inside of favorable large triggers. I wouldn't say so. When they all come up together, man, have you ever seen those trades? Watch this. We'll find one real quick. Where you've got a couple, or maybe they all line up. I love it when there's more, but it doesn't have to be. And here's another one of those pictures, Jared. There's your reversal bar. There's your favorable large triggers, but this time we have a mid-band up top and one-to-ones. Notice how the market doesn't care if it's a mid-band fibs or one-to-ones. It's looking for a Fibonacci-based indicator inside of favorable large triggers. And it goes from the very top. And it goes from the very bottom. And guys, this is a great picture. Your first 30 days are developing trust in the idea that the market is going to bounce at one of those areas. Your first 30 days is developing trust in the idea that if you follow this simple path, this simple plan, it's going to create an opportunity for success for you. I'm going to give you one more thing. This is my spreadsheet, guys. This is my personal spreadsheet. You should be building your own. But on my personal spreadsheet, I have 250 pictures of rules-based entries. 250 pictures that you can click on, that you can study. And if I click on, let's say Gary's perfect long, I have odds favorable. We haven't reached the area. There's a pullback directly to support inside of favorable large triggers, and the market continues up. And then if I go to Joel's perfect long, well, it also has odds favorable momentum, and it hasn't reached the area, and there's a pullback directly to support inside of favorable large triggers. And then if I go to Ace J's perfect short, and it has odds favorable momentum, right? And everything's going through, and it pulls right back to resistance inside of favorable large triggers. Guys, you can do this over and over and over. Click on every one of these links. Odds favorable, no terminations, pull back to resistance, money made. And you're developing trust and repetition. And then you can also go back and you can circle and do that study. Shogun, you say that it's a shitty market today. I can't be censored, so I'll go ahead and say it for you. Which market's challenging? What market are you looking at? And I'm going to show you guys how this circle idea can help. Shogun, yesterday's market? Shogun, you don't have to tell me. Did you hit your stop loss today? And I'm going to put you on the spot just a little bit. Shogun, I haven't seen one trade from you today. Not one. Not one picture to see if you followed rules. Not one picture to see if there's any way I could help you do it better. So I hope that you have a very clear understanding of everything that you're doing, because you're not giving me the opportunity to help. And guys, this is what the classroom is for. But we can scroll back. This is the NASDAQ. I'm looking for odds favorable in a clear bet. And watch, guys, if I rewind, I haven't had it yet, and I still don't have it. I'm looking for that highest probability trend trade, and I still don't have it. And what this is doing is this is reminding me that just because I want to be in a trade every second of every day, there may not be an opportunity every second of every day. Smalls are through. We haven't reached fibs. So let's see what it looked like at 654. I want you guys to get okay with the fact that 90% of what you do during the day is going to be chart reading. 90% of what you do during the day is going to be waiting for advantages on your chart. And this one pulled right back to resistance, right at the large triggers. And then it did it again, and it continued down. And you're just going to have to be patient, guys. You're going to have to wait for the best of the best. You're going to have to wait for those advantages to be in place. You're going to have to wait, because if you do, 50-50 with divergence, Paul. Oh, you're taking momentum style trades too, I see. 50-50 with divergence doesn't work out, right? So guys, post everything that you do. Post everything that you see. Post everything that you take. Small's below the large. The large are wide. They're angled in the direction of the trend. Is it going to pull back to resistance inside of favorable large triggers? Do you see how quickly that analysis happens? Small's below the large. That's my perfect entry, isn't it? I'll put a stop just above this reversal bar marker. Isn't that the one, guys? Odds favorable, no terminations, pull back to an area inside of favorable large triggers. What are we waiting for? We're waiting for a reversal bar, right? I have strong triggers. I have strong triggers. I have a clear path. I took the perfect entry. I know exactly where it's likely to continue, right? I could even do this, stop outside of the window. I'm risking 1 point. And if it gets me, who cares? There's nothing for me to do at this point. Guys, I'll risk $100 all day long on this trade. And if it goes, great. And if it doesn't, whatever. My goal for you guys is to show me a picture of this entry right there. That rules-based entry. I shouldn't have moved my stop, right? Because I had Fibonacci resistance right here. But I don't care. The only thing I'm worried about is this entry, this best of the best entry, to give you the highest chance of success. And then eventually, you're going to say, well, at 88.63, I have resistance. Maybe my stop should go a little bit higher, right? Great entries create manageable trades. Shogun, it's a great day to trade. It's a horrible day to not follow your rules. Every day is a great day to trade. The challenge is you guys think that trading means that you're in the market every second of every day. When you learn how to take the best entries, guys, take 100 of them. Shogun, one loser doesn't mean shit. One loser is one trade, one sample. Take this same trade 10 times. And I move my stop being silly, right? Look at it doing exactly. Shogun. It's a great day to study. Guys, if you base your trading plan off of one trade, you're doomed. Take 20 trades and see how it works out. Shogun, go back and find me 20 rules met, high probability trend trades. This was me just moving my stop too soon, wasn't it? I didn't get a reversal bar. This is me not letting the large chart lead the way because I'm only focused on the entry. But when you develop trust and you get a plan, great trade, Paul. Do you want to be busy or do you want to be profitable, right? That's what you have to ask yourself. 90% isn't market replay. 90% is reading your indicators, engaging the advantages. 10% is taking trades. Shogun, 10% isn't making money. 10% is taking trades that fit the rules because the rules have been proven to win more than they lose. You're gonna lose this trade every now and then, but 90% or 70 to 80% of the time, this is going to be your result. Guys, just because I did a stupid stop placement doesn't take the value out of this trade. This is me not worried about anything but entries. And since I'm not worried about anything but entries, I didn't care what happened outside of that entry because that's what I want you guys to focus on. The best of the best. The momentum said we were going down. The clear path said we were going down. Now the small triggers are in favor of the trade. Everything says the market's likely to go down on the large chart. Lady P, so shut down Ninja Trader, disconnect and shut down. This is my routine every morning. Every morning I go to Documents and I go to Ninja Trader and I go to Database and Cache and Tick. I highlight both of those, and those are the two that I delete every morning before I start. You're welcome, Lady P. Shogun, shouldn't synthetics be below mid-band and within the large triggers? Are they not overlapping one on top of the other? Am I missing something here? Now I've got two visual slowdowns. No, it's not. The trade reversed because the buyers took over. But but look at how, and I want you to see something. Look at how my small chart told me that we may push up higher. There's one loss of momentum. There's two losses of momentum. It's higher, and I've got anything can happen triggers. But let's see. Do I still have odds favorable momentum on the large chart? Do I still have an area of resistance inside of favorable large triggers? Do I still have a clear path? Isn't that still a rules-based entry? Don't I have established risk? Now, if a third divergence prints, well, then I'm out of the trade. No. Where does it say that in your rules, Shogun? Mine says odds favorable, no terminations, area inside of favorable large triggers. That's it. That's all mine says. Now I know if a third divergence prints, I want to be out of the trade because three divergences in the same location. If these small triggers don't turn, you may never get your entry. And let me show you the picture that illustrates that. No, I like it. It doesn't keep losses away. It keeps you out of winning trades. Let me show you on Paul's picture. If the small triggers don't turn against you, Shogun, chances are it's not going to make it back to that area because triggers are a momentum indicator. And in order for a small chart to make it back to the area inside of favorable large triggers, very often the small triggers are going to have to turn to get you back to that best of the best area. Does that make sense? And there's that third divergence, right? There's your management opportunity. Get the hell out of the trade. Three divergences in the same location may push the market up. 1, 2, 3. Straight out of the book, right? And there's anything can happen triggers to go with those three divergences. And that third divergence is higher. Everything straight out of the textbook. Areas either hold or break, right? There's your termination condition, guys. Look at the small chart fluctuations as we reached resistance, as the triggers were weaker. Look at all of the nonsense that happens on the 5-1 into a termination condition. And then ultimately, the area breaks. Or it's going to reverse. We never know what's going to happen, but you guys can stay out of that mess. Termination creates a full reversal. The three triggers went bullish, just like the midband's not a trigger. But yes, the trigger lines work their way inside. Three divergences, all going up. Guys, that was your indication. That was your indication that things might be changing, right? So guys, that's our first hour. Our first hour revolves around keeping it basic, keeping it simple. And I think that for a lot of people, that's difficult. It becomes difficult to embrace simplicity. No, Shogun, show me a picture from the tutorial where it says that so that I can clear this up for you. It refers as 2 triggers plus the mid-band as 3 triggers. I've never in the history of Nexgen used that terminology. Please. And then if something needs fixing, man, I'll fix it, right? I'll go through and I'll make sure. So simplicity initially, guys. 3 rules, 3 advantages. Focus on your entries. Focus on the best of the best. And what's going to happen is exactly what's happening right now is you're going to start to overthink it. You're going to start to change your rules. You're going to start to create terminology outside of simplicity, guys. And if you let it happen on 2 charts and you let it be only 3 rules, you're going to find that there's really only 2 options for you. Price reaches a resistance. If it holds, wait for everything to be strong the other direction and find your trend trade. Price reaches support. If it holds, let everything change direction. Look for your trend trade. Rinse and repeat over and over. Keep it simple. Remember that you're not in control. The only thing you're in control of is whether or not your rules are met. All right, guys, that's our first hour. I'm going to take a break and stretch my legs real quick. Um, if you have a question, post it. If you have a picture, post it. You new users, if there's one of these concepts you want some help with, let me know. We'll talk about it. I'll leave you guys with NASDAQ. Look how odds favorable momentum took us all the way up to the one-to-ones. Isn't that amazing? And then those one-to-ones with no trigger lines breaking through. Here's our reaction. Guys, I'll be back in 5 minutes. And when I come back, we'll start looking at the charts that you guys posted. All right, guys, I am back. So E, on your large chart, if you right click and you go to templates, and it'll look a little different on 8, and click load or click templates. In the drop down, there should be one that says 2 triggers only. If there's not, I'll ask John to drop a template in the room for you. So if you go through your templates and you don't see 2 triggers only, let me know, and I'll see what I can do to get one to you. Because I think it's a great study tool, because it really keeps you focused on letting momentum lead the way. All right, Shogun, so what you're showing me is a continuation trade here. So all 3 triggers are up. So when he's talking about all 3 triggers, I can see how the confusion came in there. Let me show you what he's talking about. Here's your large triggers. Here's your synthetic triggers, right? Here's your small triggers. So when he says all 3 triggers, those are the triggers that he's referring to. Your large, your synthetic, and your small. When he says all 3 triggers are up again, your synthetics are green and up, your large are green and up, and now your small are green and up. Does that make sense? It's the correspondence with the midband for this is a continuation style entry. Awesome. Great question, man. Great question. All right, guys, so I'm going to go through and I'm going to start looking at charts. Before we get too deep in this and you guys start putting a bunch of charts up, I want to encourage you to write your rules on the chart. And there's a reason that I do this. If your rules say that you need odds favorable momentum, no termination conditions, and a pullback to an area inside of favorable large triggers, what you are going to find as a new user is somebody that's trying to associate visually the rules being met with verbally what the rules say. If you go through it and you write odds favorable momentum rather than just up, if you write no termination conditions and point, where are your odds favorable momentum? Well, it's right there. It's that separation. How do I know it's no termination conditions? Because price didn't reach the next area, and then reminding yourself through language that it's an area inside of favorable large triggers where you enter the trade. What you're doing is you're reinforcing those great rules, guys. What you're doing is you're reminding yourself that in order to enter a trade, you have to see these advantages. And I want you to associate the words of the rules with the looks. Because what you're going to do eventually is you're going to go through this annotation process in your brain every time you open a chart. So the more thorough you are, the better feedback I can give, and the quicker you're going to get to where you want to be. And I'm going to begin. And guys, there's a lot of you that use checklists, right? And I love that you use that checklist and you post it right on your chart. I want you to abandon that habit if you're brand new. I don't want you to shortcut it. I want you to type it out and point to it, because what I found is that you get the best results like that. So I'm going to scroll up to the top, and I show you guys this because this is what I'm going through. I have to go all the way up to the top, and I'm going to start looking at charts, and I'm going to start looking at questions. Um, and then I have to scroll down to get those pictures or to get the questions about them. So I'm going to go back and forth, back and forth, back and forth. Joel gets us started with the pictures. Joel does a great job of taking his charts, annotating. He says he has odds favorable momentum. And he recognizes that he has no clear path, right? So Joel says, I don't have a clear path. My smalls aren't through the area. My large aren't through the area. And he takes the entry at support inside of favorable large triggers. It is a good bottom. He does have odds favorable. And he's calling this one a 50-50. And Joel, it's definitely not a 50-50 because you reach resistance, right? This is trading directly into a termination condition, and it just kind of worked out for you. Great looking trade, great management, great entries, create manageable trades. There it is again. Gary, everything says down, the path is clear. You kind of jump in below the areas, and it works out beautifully for you. More of a jump in. Here we have weak triggers. I'm trying to see what kind of trade checklist you used here. No terminations. Good top or bottom way up there. You have anything can happen triggers. But because of no divergence and everything saying down, you take the pullback and you get paid. Nice trading, Gary. All right, Safia. And I'm going to do this, and I asked this question in class earlier. So I'm going to take a picture of your picture real quick. Notice that you just put good top, right? GT, I recognize it. You said there was no pullback, but the one-to-one cleared, so it's okay to take the trade. And this is where I'm like, Safia, you're directly into Fibonacci support, directly with a reversal bar off Fibonacci support, directly into Fibonacci support. And I asked earlier, I said, well, what made you think that support would break, right? What happened that made you feel as though support would break? And I'm not saying that it's a bad trade. I think it's a little risky trade. Even the momentum style trade, Safia, say let the body of the bar clear the area and then sell the pullback, right? Not sell directly into it. So this is maybe a little misunderstanding of the rules. You want the body of the bar to get through the trouble spot, and then you're going to sell the pullback at the area that it just broke through. Um, and this goes back. If you're confused by momentum trades, writing the rules for a momentum trade, right? Because there's more than just a good top in the rules, right? And there's more than identifying that there was no pullback. So, yeah, make sure that you're writing your rules. Why do you do what you do? So that you can come back and do it again. But for me, this was an awesome bottom. And this has all the potential to just be a little retest before it goes up, because all of my trigger lines are above support. Everything says in the moment that this area has the potential to ruin your day. And I'm glad that worked out for you. I'm always glad when your trades work, everybody. I think it's important that you understand what the challenges are so that you can come through and make it repeatable. Because if you know why you did what you did, it becomes easier to repeat it, to find that success over and over, and to make sure that it is a pattern that wins more than it loses. And that's the goal every time. Every time you take a trade, is it a trade that if you took it and you took that picture 100 times, are 70 of them going to win? Well, what I'm saying is on that particular style trade, Safia, the rules say, let's see if we can find an example. NASDAQ is bouncing a little bit. The rules say, let me just find a picture that looks like it, maybe. Here's a great example. With all that momentum, let it break, let the bar clear, and then if the momentum is odds favorable on both charts, that's your momentum style entry. Price bar. See how it doesn't break, doesn't break, doesn't break, doesn't break. Now it breaks, and there's a pullback right there to it. It snaps right back with all that momentum and pushes up. And of course, there's no momentum here, but because it's coming from the termination condition. Great questions. And this is how I get better, guys, over and over. So price reaches support, multiple divergences. See how price breaks it and then pulls right back to the triggers inside? On this picture, Safia? You let it break and then it pulls back because of the termination. This is perfect execution of the lesson that John gave. And I believe John is saying wait for the close on the correct side of the small triggers to go, is what he said yesterday. And then we get up here, small's above, larger not. We get that gap and it pulls back and it pulls right back to the bottom of those triggers. Gosh, I didn't have any crashes yesterday, none whatsoever. Nice execution. Jose trades. 50-50 trade, no divergence. Just doesn't work out. Jose trades, are you with me? Once again, remind me why you have this chart. This is your nemesis, my friend. It's my job, right? I love the trade. I love the trade until I look at this chart here, and then it doesn't make any sense at all, right? Um, Guys, two charts are awesome. Two charts are amazing. And that's a 50-50. And look at your large triggers on this chart, Jose. You know, at the time they were probably angled down. Maybe a quick little bump inside of the triggers here at 62. And then a stop right around 66 or so. I think it's the right look. I think it's definitely the right look. But that 21 should have kept you out if you're going to use it. Or at least you managed it tight. It was great management. 9 ticks. It's got to happen every now and then, right? You got to gauge those advantages. And then go. And then Paul, there's that 50-50 trade again. Guys, you're going to see this. 50-50 trade. Smalls are through. Large are not. 81.95 isn't broken. 82.07 isn't broken either, right? And then divergence prints. So we lose momentum and we couple that without having a clear path, and it just creates a problem. And that 50-50 doesn't work out. And when we talk about that 50-50 trading, guys, I've put this into that simple plan for consistency. 50-50 trade, one area not broken. If your large triggers are trying to break through multiple areas, it's going to get more difficult. Making sure that you have odds favorable on both. No divergence from a good top or bottom. This is how you give yourself more advantages. And I even put under there, divergence, no trade, guys. It takes away the advantages on the 50-50s quite a bit. Safia. And I love that you put this. Please help me understand what I did wrong here. I know I traded into a term and rushed the trade. Safia, it sounds like you know what you did wrong. Okay, so let's break it down. When you say price reached and trigs didn't, what does that mean? So let's do this real quick. Hold on. I want you to see something real quick. Just like this. And this is gonna make my brother happy that I'm doing this. All right, so what we're gonna do is I want to talk about a lesson. And Safia, I'm gonna use your picture for the lesson. And I want to talk about what I see. Um, Small triggers made it through, right? So instantly, everyone says, hey, my small triggers are through. Gosh, I'm going, I'm going. I have odds favorable. The small triggers are through. They eat. I mean, barely. They're a fraction of a fraction. They're a tick through the area, right, Safia? That's cool. Where are you coming from in this picture? Are you coming from... My goodness, I've got so much stuff. So we're coming from a bottom. Everything's coming up. We smash through this area. We get to the next area. This is one of my least favorite looks for a 50-50. I'm gonna share why. The smalls make it through, and I love that, and that's a good look, right? My large are still below. That's okay. We're good. So on this chart, Safia, we barely made it through, which I don't care for, but you've got odds favorable. The smalls make it through. And my large are trying to break two areas. They haven't even touched that one, and they haven't quite cleared this one. Do you agree so far? Do you see it? So now what I'm counting on momentum to do is I'm counting on momentum to not only smash this one, but also this one. And that's a big gap. That's a lot of work. So I'm barely going through. I'm trying to break two areas. And then over here, I'm losing momentum again, right? I've got divergence, which means that I'm losing momentum. I have two paths that aren't clear. And you take the entry, and when it didn't get to your midband, you probably had a limit order down here. But when it didn't make it, you jumped in up here because you thought it was going without you. Is that right? Because you didn't let it hit your limit order, because that's going in on the way up. So let's talk about what this trade is, Safia. This is you not making money from here to here. This is you saying there was all this movement and I didn't get any of it. And then you get to a 50-50 and you're like, I'm going to take this damn trade because I didn't get paid on the way up to it. And when you don't get paid on the way up to it, you ignore the fact that there's divergence, right? You did make money up. Okay, awesome. You ignore the divergence and it comes back and you get in, and this is the NASDAQ, right? So Safia, divergence on a 50-50, trigger lines down, and those trigger lines act as resistance. Do you see how it's just not optimal? You're counting on two areas to break, right? You're not giving divergence the credit, and then on the NASDAQ, if it makes it all the way back up to those small triggers and bounces, and then your triggers keep coming down, that's a pretty good sign, right? Does that make sense? I like your large chart setup. I think it's great, but I think that especially on the NASDAQ, you take away that advantage a little bit when you start throwing divergences. If you had gotten an entry right here at the midband on that 50-50 with one divergence and use this as your management spot, you tell me, where do entries come from, Safia? What do your rules say? areas, right? Hey, Ligarius. So if it doesn't make the area, are your rules met for entry? Not so much. And that's where we see these jump ins. And I know that it's frustrating because we want to be in trades, right? We want to be in trades all the time because if I'm not in a trade, I'm not making money. But the flip side, if I'm not in the wrong trade, I'm not losing money. And NASDAQ will put you in your place. And if you go back on NASDAQ and you look at how many times there's a little bit of overrun, it's going to make you start insisting on a better look for your 50/50s. It's going to make you start looking for smalls considerably through, for the large triggers starting to breach. Does that make sense? Is that helpful? I hope that's helpful. Oh my gosh. You guys, this is what I like to look for on a 50/50. Like, I want to see those small triggers cranking through, right? I want to see those small triggers on, where did it go? I want to see them blasting through that area, giving me a better chance, rather than them just kind of peeking their head through. Great picture, Safia. Thank you for that. I think that's a great lesson. When I talk about 50/50s, and I talked about it when we looked at Paul's picture, when I talk about a 50/50, I'm going to pull it up again. And this is one of the things that I say. My money's worth a perfect entry. No divergence, right? I don't have a clear path. So I'm making sure that I have a small window, that I don't have divergence, that I have strong triggers. And what you'll find is that if you embrace these advantages, Ligarius, let's see that picture. Absolutely perfect. Nice job, Ligarius. Welcome to the classroom. What I find is that when I begin to forfeit other advantages on those 50/50s, the likelihood of a success goes down dramatically. Let's see where I'm at. That was Jose. That was Safia. Paul, we saw yours 50/50 with divergence. Didn't work out. Safia's 50/50 with divergence. Didn't work out. What kind of trade is this, Safia? You say momentum trade. Which direction is the momentum? Oh no. Your momentum is down, isn't it? Do you want to see something interesting? No, not okay. You can't say okay. That means shut up, Mark. I don't want to hear you anymore. And this is interesting, is that's almost the same look that you went short on earlier, right into the fib. So when you're taking momentum trades, let's talk about it. The first thing you have to have is momentum, right? Small triggers down, large triggers down, synthetics down, large triggers down, small triggers down initially, and then your pullback never really happened on this one. So remember, the market has to go up, Safia, and then pull back for that momentum style trade. Does that make sense? It's not the same entry as a high probability trend trade. So if everything is going down and those small triggers are going down, then that becomes a problematic trade. And I know that you put in the perfect example of one earlier. Beautiful execution. So let me go back and find that real quick because I think that sometimes when we make mistakes, it's okay. Like mistakes happen and that's how we learn and it's so important. But then the flip side of that is being able to acknowledge that you are very capable of doing it well. And I can't find that picture right now. I'm scrolling through. Um, is this considered a 50-50? No, Safia, this is just you sitting on your hands. Um, Smalls are below the large. So it can't be a trend trade, right? It can't be a trend trade up because the triggers are down. This is really, I can't make up rules for this one. This is hoping that a blue line holds. And even a close on the correct side gives you a better chance of success on this one. And it's entry at the fib on the small chart, but it's inside of down triggers, right? And that's where the challenge is. We haven't gotten, it's just an ugly spot and you got lucky. So it can't be a 50-50 because at the time of the circle, yeah, that's okay. I'll tell you what, if I'm going to take a trade and it's the wrong trade, I want it to be, want it to win. But it can't be that momentum style trade yet, just because we don't have the momentum. So we want that small chart to lead the way, right? On the momentum, we let the large chart define the termination, and then the small chart gives us that opportunity to get in. And it takes practice. So keep taking these trades and keep taking these pictures, and we're going to keep talking about them. And what's going to happen is it's just we're going to get exactly where you want to be. And it's just going to be repetition. You're trying to teach yourself something new right now. And I'm hopeful, fingers crossed, that you're at least doing it on simulator as you learn to understand it. Because remember, guys, you don't have to take trades live to learn them. That's what simulator's for. It creates an opportunity. And I never tell you guys how to trade, but no worries. And then Paul, this is that one. I'm not sure what kind of trade this is. I like that you're winning. There's a lot of momentum. There's a lot of momentum. There's a lot of momentum. It's not a trend trade. It's not really a momentum trade because we're right into a term. Looks like you're just banking on that momentum and it worked out great. Guys, remember when I said that the advantage of momentum will erase mistakes? That's a great example. When every chart is screaming down, you can just about do that. All right, Debbie, 50-50 trade. Not a good bottom. Odds favorable. Smalls have barely made it through resistance. Large haven't broken a couple areas. Divergence prints at a pivot stop out. You take the perfect entry. How did this one work out? I like after pictures too, guys. Get me an after picture every now and then. Let me know what happened. I love the entry. The entry was perfect, guys. Whoops, rock star entry. Paul, 50-50 with divergence on the S&P. Great entry, first profit target hit. And then that's the one that we got 3 divergences on it, and it ultimately went back up after 3 divergences. Turned a winner into a loser by being greedy and not taking profit at the fib. So trading directly into termination conditions. You take the perfect entry. This is a good lesson. You posted the after yesterday. John didn't comment. It must be genetic. It must be, Debbie. I try to never miss. Could have just eradicated that headache not trading in determination conditions. Um, Gary, I've got a huge picture on my, or not a huge picture, I have a huge note on a piece of paper in front of me on my trading desk. And it says on my NASDAQ checklist, don't trade directly in determination conditions. They won't break because I get my butt kicked more often than I don't. Ziva, have a great day. It's always nice having you in here. And notice that you didn't have the top or bottom. You didn't have the clear path, right? You told yourself they weren't there and you still took the trade. And then I'm not opposed to this trade with that much momentum. But yeah, can't be greedy. Not on those. Good morning, PFI. Nice to see you. Let's see where we're at. You guys are killing it today. Great trading, great chart annotation. It's just repetition, right? Rinse and repeat. 50-50 trade with divergence. Great entries create manageable trades. Great heads up, you take your exit. Paul, nice execution on that one. Forfeiting the advantage of a clear path, but because of momentum, it creates a manageable trade with a great entry. Nicely done. Hey, Craig. Craig, is this just a test? Hope he's still in here. There's that termination condition coming into play, guys, on the large chart. And on the small chart, you can see how it dances. Great lesson for that one, Craig. Thank you for posting. All right, Miss Safia. I really want to see what's happening before that. I love this. Termination, triggers rolling. Do you see how your large and synthetic are up on this one, Safia? Do you see the difference between this entry and this entry? Big difference, right? Here everything says down. Here your large chart is starting to say up, synthetics. And just a little bit of patience, Safia. Get to the correct side of the triggers. Or even more patient, let the small triggers roll, and then there's that little stab back right to the one-to-ones. Do you see it? But here, triggers up, triggers up, triggers up, triggers up, right? You're giving yourself all of these advantages. They're above the support, everything is up. And I think just that close on the correct side, that's that final little piece of patience. That if this one isn't going to work, it's going to ramp through, right? Because you're coming off of resistance that created a full reversal. So that market's trying to figure it out. So just getting to the correct side of those small triggers, I think it's a great patience piece. But this one has such a better chance of success by letting those triggers roll a little bit, give you a little indication. Gary, 50-50, one divergence, perfect trade, and you kick the greed, right? You're saying there's all those fibs that haven't broken. I'm going to get paid. I'm not giving it back this time. Nice recovery, Gary. And then Alan. Let's figure out what we're doing here. Says down. Alan, you've moved into the momentum style trades. All right. Guys, you know that You were originally looking for a down bar entry. It was canceled. So then you were looking for the momentum style. Okay. So, Alan, if you're taking a momentum style trade, what do you suppose is the most important thing that you have? Momentum, right? I love that you got in. I think it's great, but do you notice how you don't have momentum? Not like you do here. Your smalls are inside of your synthetics, which means loss of momentum as well, right? Your price bars are on the wrong side of the small triggers. And I think this may be just a little misunderstanding of the concept. And if you scroll back a little bit and you see where everything is its strongest, that's an awesome window for one of those momentum trades. Down here, you're just hoping stuff doesn't stop. Does that make sense? And I'm telling you, Alan, I tried to take this trade a lot because Ron was in here and Ron was taking this trade and he was making it look so effortless. And I literally went back and I market replayed about 10 days trying to recreate what he was doing. Um, and there was a couple consistent things. The first thing was the momentum on the large chart has to be its absolute strongest. And then the second thing is that the tail end of the bar gets to the correct side of the trouble spot. So with this much momentum and everything saying down, when these bars are outside of the small, that's your momentum phase. That's your best of the best as it comes down. Couple different elements. It looks like a pretty easy trade in the beginning, but there's rules. There's definitely rules. All right, Craig, one more time. Nope, this is E. All right, E. Oh no, it's not coming up. You're welcome, Alan. Odds favorable, anything can happen. Absolutely. E, rock star. And look at the bounce that comes off of those anything can happen, especially at resistance. But notice how with the odds favorable, it just keeps going, keeps going, keeps going. Pretty awesome, isn't it? And these anything can happen triggers, there's that nonsense on your smaller, faster chart. This is where people get chewed up, hoping things break, right? Nice picture. Baby steps. This is what you do, though. Man, Eve, this is picture perfect embracing the path. Getting good at the simple so that you can work it into trades. Don't feed Norbert. I'm going to cover who Norbert is. And then Debbie, there's your beautiful entry creating a manageable trade. Quick profits on a 50-50 because it's medium probability. You make your 100 and then I love seeing that you moved your stop on this trade because there was a time where you wouldn't, Debbie. There was a time where you said it either goes to my target or I'm giving it all up. And I love that you're saying this area hasn't broken, this area hasn't broken. Let me make a little money and not risk anything as I come into it. Beautiful, beautiful execution, Debbie. Nice job. I'll ignore a trade later, but this one I'm going to talk about. And guys, this is why termination conditions are such a big deal. This is who Ron calls Norbert. There's two types of people in the market, guys. There are sharks, and the sharks are the big money investors. The sharks control thousands of dollars or thousands of contracts. The sharks are the people that when they take profits, the market reverses. When they buy heavily, when they sell heavily, the market spikes, the market runs. These sharks are your large chart. They're the big crowd investors. These are the guys that not only create the momentum, that not only create the trend, but these are the guys that are reacting to Fibonacci. So when this guy, and I'm going to show you from the picture that E put because it's a brilliant picture. When these guys want everything to go up, your chart looks like this. But when these guys reach Fibonacci resistance and the momentum is gone, guys, this is what happens. This is the reaction. There becomes this fight between two sharks for supremacy, the buyer sharks and the seller sharks. Next-gen users, you never have to get caught up in this. And the flip side is you know exactly where it's going to happen long before we get there, and it becomes a beautiful profit target. So we're going to let the sharks do what the sharks do. We're going to let the sharks create momentum. We're going to let the sharks react to these areas. We're going to be remoras. Is everybody up to date on marine biology? A remora is a fish that swims next to the shark. And the shark doesn't need him because the remora stays out of the way. But when this guy eats a tuna, this guy eats wonderfully. When this guy catches a mackerel, the tail falls out of his mouth, and this guy never goes hungry. Guys, allow the sharks to be sharks. Stay out of their way. Let them create the momentum. Let them tell you that there's a clear path, that you haven't reached an area they're going to react to, and be a remora. And the remora gets fed. The remora capitalizes on the hard work of the shark. This guy right here, going in the mouth, that's the guy that tried to be first. That's the guy that tried to go short against the trend that was up. This is the guy that fought momentum. This guy right here is your small crowd. This is the little pushback that we need to get the perfect entry. So remember, you're not in charge of the market. Someone else is. The market's going to go up and down. The market's going to do everything that the market does. Your job is to simply put yourself in a position where you can recognize patterns that are bringing you success. You can recognize odds favorable momentum. You can recognize no termination conditions, guys. They finished the move. Do you see it? Price didn't quite make it to the fib, comes all the way up to the mid band. Large triggers never follow, and it finishes the move right to the bottom. This is that gap theory that John was talking about. And let's talk about the gap theory, because this becomes a huge part in safety. The gap theory says that if price pulls away from synthetic triggers too fast, and when we talk about synthetic triggers, in this instance, we're talking about your large chart. We're talking about that higher time frame. That chart, if price pulls away, accelerates away, and hits a Fibonacci area, whether it's a mid-band, whether it's a 1-to-1, whether it's a fib, it tends to snap right back to that large trigger. So if price accelerates away and reaches a mid-band and the large triggers remain a full bar away, it's likely to close the gap. No short trades in here, even with that odds favorable momentum. This is where that 50-50 look gets its butt kicked. Price reaches Fibonacci, all of these areas, and the large triggers stay a full bar away. Price is likely to close that gap. Once again, straight into Fibonacci resistance, even from a good bottom. Price is a full bar away, it's likely to close that gap. Guys, this is keeping you out of shorts. It's not telling you to go long. This is a patience piece. Price closes the gap. Price reaches a mid-band and closes the gap. Price reaches Fibonacci resistance, closes the gap. It keeps you from looking for those longs. Do you guys see it over and over? This is a pattern that repeats itself all the time. And when it comes from a bad bottom, sounds good. If you have any questions, remember my email works, marknovak@nexgent3.com. As you're studying, if you need a little clarity, don't be afraid to reach out and ask. I'm happy to help. Price reaches resistance, large triggers don't follow. It closes the gap. Guys, we see this over and over and over. It's a pattern that's repeatable. Now I have a termination condition. I'm waiting for the full reversal. I'm waiting for odds favorable. Sometimes it gets caught between areas. clear path, support reached, all triggers are above, and it holds right next to the next area, pushes all the way back to support, and the large triggers don't blink, and now it continues up. We're looking for this area to break for potential continuation to the upside. There's that large triggers a full bar away as we come into the mid band. We'll see if it pulls back and closes the gap to those synthetics, guys. Patterns repeat themselves every day. Patterns are what bring us success. Patterns happen on the large chart that have us looking for an entry on the small chart. Your job is going to be to study it. Your job is going to be to do this so many times that the repetition creates recognition, right? To look at so many perfect entries that repetition creates recognition. It says page not found, but you also type constipated on the back end of it. So, hold on. It added constipated? That's kind of funny. So watch this, Ron. If I back it up and I get rid of your constipation, perfect. And then, hey, Alan, are you with me? Small still cranking outside here. See how the bars are on the left side of the triggers in that momentum phase? It certainly helps a little bit. And he says he's in a little late, and he is. He's letting this clear, and he's looking for that opportunity just to get down. Quick little snap. But I think that this look on the trigger lines really becomes advantageous when you're taking this sort of trade. Nice trade, Ron. Little rusty. A week off makes a difference, doesn't it? So what do you guys want to talk about? Midband's still holding. Large triggers are still down here. Notice how these triggers are up here and the synthetics are down here. That's not favorable large triggers. Three divergences in the same price range corresponding with a midband that may push back to those synthetics. Everything we do revolves around chart reading. Termination, now the large are up, the small are up, but we're directly into resistance. We still need that little bit to get us a clear path. This is how quickly your chart reads are going to happen when you study a little bit. And now my small and large are through the trouble area. My smalls are starting to eke above the large. You guys want to see if NASDAQ creates an opportunity here? Smalls breaking and accelerating. We have a clear path. My next area is until almost 82. Do I have any? My triggers are split, which takes away that advantage a little bit. Makes it harder to determine a potential window of opportunity. So watch this. If I go from the top of the triggers to the bottom of the triggers and the highest point of support to the lowest point of support, guys, look at how big that window is. That's a lot of risk. When your trigger lines aren't one on top of the other, it creates a bigger window. When you have a bigger window, it means more risk. It's tightening up a little bit from 47 till about 42. Which one, Jose? 36? Is your tick data on? You can see that it's a synthetic line. But at this point, it's in the rear view mirror on the large chart. We've already cleared it. You don't have it on the 5-1? How many days back are you? I'm not even sure. I'm 10 days back. And I cleared cash and tick this morning. You're 10 days back. Maybe there's a little discrepancy between 7 and 8. My 8 users on NASDAQ, do you have a 36 fib? I'm not sure. One of the things that I've found to be true is you have to trade your charts. And every now and then there's going to be discrepancies. My brother and I compare fibs in the morning to see if we're online. We both go through the whole rigmarole of cleaning caches and syncing clocks, running at our highest performance. Sometimes, Jose, if things just don't seem to be lining up, on NinjaTrader 8, you can go back and before you open the charts, you can download the historical data for the day. Let me see if we have this one. And you can actually download the data rather than just letting it fall in. Repairing, resetting the database, disconnected, sometimes helps on 8. Making sure that there's no glitches in the matrix. Guys, we have about 30 minutes left in this classroom. We've talked about odds favorable momentum. We've talked about no termination conditions. We've talked about areas for entry. What would you guys like to talk about? Everything that you do, every great entry that you take creates a management opportunity. I think that's one of the things that people forget is that when you focus on the entries, the trades become manageable. You can identify where the market should continue. You can identify where the market shouldn't continue. And if you focus on these advantages, it really does create an opportunity. So I'm going to give you the checklists over. I'm going to give you the high probability trend trade checklist. I'm going to give you the checklist one more time with the pictures on it. And I'm also going to give you the simple trading plan to keep you focused as a new user. Um, One thing that I've found, and guys, I speak from my own personal experience a lot. One of my biggest challenges as a trader, and I'm going to tell you, is one of my biggest faults as a human probably, is that when I get comfortable with something and I find success, I abandon the things that bring me success. So if I have a checklist that gets me where I want to be, and I'm following that checklist 100% and I'm having success, my brain says, you're so freaking smart. Why don't you try to do other things? Why don't you try to catch trades outside of the ones that are bringing you success? And I think that that's a pretty common human trait, right? Is most people do that. It's pretty much a 50-50 that doesn't work, Safia. That's it. When the small triggers get through an area, you want to see a fake breakout? I'll show you the perfect picture of one. Let me find it. There is the perfect picture of a fake breakout. What's a breakout mean? A breakout means that they're breaking through the areas and continuing in the direction of the trend, right? Down here, a 50-50 is a fake breakout. You think they're going, but they don't. The buyers have other things. So the idea, is there a way to identify a fake breakout? Well, divergences from a 50-50 help a lot, but you really see these breakouts, and when he's talking about it, let me see if I can find something. So here we go. From resistance to support to resistance to support. When the market consolidates like this, Safia, we're waiting for a breakout, right? We're waiting for that breakout in the direction to give us an advantage. Does that make sense? When that market is bouncing off of Fibonacci areas and we're just saying to ourselves, If it breaks out to the downside, I'm ready to go. Or if it breaks out to the upside, I'm ready to go. And what you're going to find is that you'll get that 50-50 look when it's that fake breakout. When the sellers think they have it and the buyers let them squeak a little bit past and then they unload on them. And this is one of the reasons on those 50-50 trades, especially when the market's been consolidating, it's so important to make sure that you have the advantages. But that's all he's talking about. Let's see if we can find another area of consolidation. Termination to termination to termination to termination. And then when it comes back to resistance, here you can see where the sellers have taken over. And then once they clear, that breakout's complete and the market hauls butt all the way down. But you can see how it was that fight between buyers and sellers. There's those triggers don't agree. Once again, from resistance to support to resistance to support. You thought you had the breakout to the upside, right? It was that fake out. And then the sellers crank. That's all he was talking about. Awesome. Paul, every chart says up. The path is clear. And you're taking the momentum style off the one-to-ones. Get paid at the divergence line. Nice job, Paul. Safia, do you see his entry? How the bars break and then he buys the pullback right to him? This is kind of a cross between a momentum and a high probability trend trade because the triggers are up. So momentum is there. The path is clear. And he's right at the support inside of favorable large triggers, which also happens to be that little breakback to the one-to-ones. That's like a doubly good trade, Paul. Nice job. The triggers are up. The path is clear. Right back to support. And there's the one that Paul took right there. It's like a come and get me. Yep. Look at all that indecision at fibs. It's the market's come hither look. Safia, there's your momentum trade. Termination, you get a full bar. It pulls back to the small triggers right there at the mid-band. See how it gets to the correct side and pulls back, gets to the correct side and pull back. Find examples of these all day long. Just got to study it. Study to get good at it. All right, what else do you want to talk about, guys? Class is designed to be, the first 40 minutes are a lecture. The last 2 hours should be a conversation. They should be you guys saying, hey, Mark, I'm working on this concept, but I could use a little help, right? If you're studying something in the after hours and you need a little help with it, this is your opportunity to get a private session, guys. It's a one-on-one conversation, just the two of us. All right, Jared. 50-50 trade with divergence. You did have a reversal bar, didn't you? So, Jared, I like the look. I like what you did. I think that if a trade is going to work, you gave it the best chance. There's one thing, Jared, that I don't care for on this trade. And it's divergence. It's divergence on a 50-50, especially when I'm trying to get through this support. And I'm also trying to get through this and I'm trying to get through these one-to-ones. Do you see the distance that has to clear? I've got 13 ticks that haven't yet broken, and then I get a loss of momentum. You get in. It's a beautiful entry, Jared. And I think that you're in and you're giving it the absolute best chance for success. I like everything about what you've done. But when you get this reversal bar on a medium probability trade, Jared, it gives you an opportunity to drop your stop just above it, which means that you've got 6 ticks of risk above this reversal bar rather than giving up. What is that? 96, 16, 9, 18. No, that's 4. That's 17 ticks. Do you see the difference, Jared? Above the reversal bar, if it's going to go, let it go. If it doesn't, let's take a small little hickey and wait for the next best. And I think that's a big part of it, guys, is managing your risk. Yeah. And it makes it easier to manage the profits. Great picture. Nice job on the entry, Jared. I think you nailed it. And then, Paul, you say 3 divergences. Psh, I'm done. I like it. Paul, great management. Paul says, I got a job to quit. I have to be consistent. Day in and day out. You want to see something funny, Paul? In my picture files, on the 18th day of July, 2023, you believed you were going to quit your job. I can't wait to give that to you when you quit your job. Great management. I know you will. Me too. And you guys are going to be stuck without me. So you better practice now. Guys, this is the education path. To minimize your learning curve, post pictures of your trades in class. Every trade, win, lose, or draw. If you win and the rules are wrong, you may have a short-term victory, but a long-term failure. What does that mean? That means that if you fight everything and you get lucky and make $1,000 on one trade, that is not a path for success, guys. That's getting lucky. How are you going to know the difference? To be sure, you need feedback from me, from us, from Nexgen, and we're here to help. If you place a trade on the simulator, if you participate in class, there's no risk of loss or capital. You need someone to tell you what you did right or wrong. There's a lot of you that hate to be told that you did something wrong. Change that, right? Embrace the idea that you're brand new. Embrace the idea that you're a student. Surgeons do not start medical school taking out lungs and doing transplants, right? They learn the basics so that one day they can become proficient surgeons, right? They get a foundation. This is exactly what you're doing, guys. You need someone to tell you what you did right or wrong. That's the educational magic. Absolutely, PFI. So embrace the idea that it's okay to ask for help. PFI, so we're going to call it the gap theory. I'm going to try and stay consistent on the language. And the gap theory says that if price pulls away from the synthetic triggers too fast and too far, it's probably going to snap back to the large triggers. And this is a large chart phenomenon, okay? Doesn't have anything to do with the small triggers. It's 100% price accelerates away from those large triggers and it reaches that mid band or maybe Fibonacci. And if those large triggers are a full bar away, if there's room for a reversal bar before the market gets back to those triggers, it's likely to close the gap. Because your triggers are a moving average, and if you bust away from that average, it self-corrects. And that's kind of what this is. So accelerate down, hit a mid-band. If the large triggers are above the reversal bar marker or right at them, it's likely to close the gap. Same thing. If it hits Fibonacci resistance, and here just termination conditions in general, but it's likely to close the gap because the large triggers stay a full bar away. Does that make sense? Straight into resistance. And this is where a lot of you guys are going to say, but it's a good bottom, Mark. It's a termination that creates a full reversal. Absolutely it is. Your termination conditions are amazing, right up to the next termination condition. And when we reach Fibonacci and the large triggers don't follow, it's likely to close that gap. There was an awesome example of it on NASDAQ this morning. John Novak and I spend the morning talking to each other. This was the NASDAQ. Great termination condition. Awesome termination condition. It creates a full reversal. That was John Novak's long at the go arrow. When price reached resistance and the large triggers didn't follow, that's your exit, guys. Because it says that price may pull back to those large triggers. And what it does there, we don't have any idea. Does that make sense, PFI? When price accelerates away from the large, they tend to snap back. And here's the cool thing, and this is why I say entries inside of favorable large triggers. Because on your smaller, faster chart, isn't that what gets us to the best of the best area? Price is likely to close the gap back to the large. And there's areas right inside. It's not exactly the same. So that's a large chart termination condition, PFI. And we used it mainly when we're talking about termination conditions. Let me open the tutorial section real quick. Absolutely. That's a great question. But I use it mainly on termination conditions, and that's it right there. That's how we gauge when it's okay to trade into that mid-band. If we reach the mid-band and the large triggers aren't a full bar away, man, all day long, I don't consider it a termination. But if we reach that mid-band and those large triggers don't follow, it's a little safety measure. It's a little bit saying, ooh, I'm going to wait and I'm going to see if it closes that gap. So great question. All right, Craig, let's see what you did, my friend. So, Craig, there's one thing missing on this one that I would absolutely love to see, and that's rules. Why are you doing what you did? Right? Where did you get into this market? Here. And why did you get out there? And what made you get in here? And what made you get out here? Craig, being able to repeat makes life easy. Here you have strong triggers, smalls outside. Here we're breaking through those areas. And I love that you take your entry right back towards that support. Everything says up. And then you're cranking out and you make some money. Everything's green. Everything says up. You're trading from the areas. Actually, you're trading from well above the areas and coming through. So Craig, great picture. Great job with direction. Great job with momentum. We're going to refine you a little bit and get you in at those areas inside of favorable large triggers. But one of the things that I want you to do, Craig, and guys, this is for everybody. And it feels like work, doesn't it? Mark's making me work. Annotate your charts. Talk about why you did what you did. Because the whole idea, ladies and gentlemen, is to be able to recreate what brings you success, to be able to back test what brings you success, to be able to go back at any point in time and find your rules being met so that you can determine and that you can verify and validate that it does in fact win more than it loses. Because those are the trades that you want to take. And what you're doing is you're developing trust. And that's what this repetition does, guys. And trust is the firm belief and the reliability, truth, ability, strength of someone or something. And in this case, it's your rules. And when you have trust, you're going to have confidence, belief, faith, freedom from suspicion or doubt. I love that because I want every one of you to have both suspicion and doubt. And then I want you to go back and I want you to test this methodology and it will remove all of it. And the harder that you work to disprove everything that I say in this classroom, the more likely you are to be with Nexgen for the rest of your life. And you're removing distrust and skepticism through your own work, through your own study, developing trust, embracing the plan, recognition through repetition, confidence through the memory of success, guys. That's the goal each and every day. And for you guys that are getting there, signs that you're maturing as a trader. And this is taken from the internet, guys. This is me Googling, how do I know that I'm on my way? The number one thing that all the websites said, that all the professional traders, that all the trading coaches, even outside of Nexgen said, is that when you manage your risk and then you manage your reward. When you focus on managing your risk. How do we manage risk with Nexgen? We manage risk by having odds favorable momentum and a clear path. We manage risk by getting in at the areas inside of favorable large triggers because it creates the least amount of risk. We're trading a methodology and we're taking these trades that have been proven to win more than they lose. We're managing our risk, and then when we finally figure out these entries, when we're a week into it and we're getting in at the right areas, we're managing the reward. So what does that mean? Managing the reward, PFI. It means that if you're in a long trade, see if I can find an entry picture, right? Managing the reward. Let me pull up a picture that shows you what I mean. Almost there. Hold on. Trying to figure out which picture is going to be the best one. No, it's okay. We'll do this. Man, I've got a lot of stuff up, right? Manage risk with a great entry. What does it mean to manage reward? It means that if I'm in a trade and I reach a red line and none of the triggers break through, that we're taking profits instead of creating hope, right? That we're in this game to make money. We're not in it to be popular. Everything doesn't have to be a home run. It means having a plan. What are you going to do with your great entry? What are you going to do with that managed risk? Are you going to have predetermined targets that keep the hope and the fear out of it, right? Are you going to have that realization at some point that if you take 5 trades a day, only 5 trades a day, and all 5 of those trades are considered a bust and only make $100 each, that you still made $2,500 that week, that you still made 10 grand, creating the mindset that this entry makes everything better, that this entry reduces my risk, and that I have to use Fibonacci, I have to use these management ideas to create wealth with the entries that reduce my risk. Does that make sense? Gary had a picture earlier where he said he got greedy and he didn't take profits at the right spot. Here, Gary takes a low entry and he says, I'm in this to get paid. I'm going to make my money. Let's see if Jose, same thing. He took the entry at the area. Everything says up. And he's like, I'm going to get paid. It doesn't have to make the fib. I'm losing momentum, right? My areas fall outside of the large. So he manages risk, and look at his trade. Holy shit, Jose. Pardon my French. Jose has 4 ticks of risk on this trade. He takes profit at the first trouble spot, managing the reward. Does that make sense, PFI? Ooh, I just got an echo in my headphones. This is weird. Can you guys still hear me? All right. Apparently it turns off the voice or the noise deafening. So he manages the risk, and he gets up here and he says, man, I don't have any more risk on this trade. And everything still says up, so I'm going to hold the trade. And he follows it with this pivot, and he continues to manage the risk, but the large chart leads the way. And then when the small triggers start working in and the small triggers start working in, he says, I don't have to anymore. The 4 management strategies Are there 4 management strategies? One thing that you do have, PFI, is Nexgen gives you, let me find the ATM strategy. When you download the workspaces, whoops, wrong one. Oh, that's not the, oh, I see what you're saying. I'm with you now. Here you go. PFI, I'm going to double up on you, man. I'm going to give you my whole spreadsheet. That's for everybody, not just PFI. Download that mofo. Start tracking your trades on it. I know you have a trade tracker, I think. But learn what those entries look like. Click on all of these, right? Everything says up. Look at that entry right at the area inside of favorable large triggers. Learn this path. And then when I say every great entry has a management side to it, here's the 4 right here that you're talking about. Taking the great entry, and then from that great entry, knowing that you either get hit or you get a reversal bar, pragmatic, methodical. And if you get a reversal bar, you reduce risk. And if it reaches your first profit target, you're taking money, you're getting paid. Memory of success. And then the 4th slide is the second target. So all of that is on the spreadsheet. And then the key, and what this really does for you, is it takes all the emotional out of it, right? It becomes very pragmatic. It becomes very, if this, then that. If this, then that. If this. And that's what day traders do, guys. Day traders trade consistent. If then that. If you look at a successful day trader's trades, and they show you 100 versions of their trades, that's it. Play the probability. And I use Ron as an example, and it makes him blush because he's a humble kind of guy. But Ron's trades, if I looked at the last 100 trades that he's posted in this room, 90 of them look exactly the same. 90 of them look exactly like his rules being met. And I want you guys to ask yourself, I want you to go back to your last 10 trades. This is your homework today. This is for all you guys that are in here that don't have a black box next to your name, that are trading, that are on Apex, that are trying to become profitable. So Safia, Gary, Shogun, Finman, Johnny Rocket, Mark SP, Surgeon, all of you guys, Alan, D, Dionysus, Luciano, Craig, John in Alaska, Ringa, Tom K. Go back and look at your last 10 trades. And do they fit the rules that you've put out in front of yourself? Do they fit your trading plan? Or are you deviating from your trading plan? And when you deviate, what does that do to your success? Losing momentum, no areas inside of favorable large triggers. If you went long, you broke your rules. You're deviating from the path that's been laid before you that's proven to be successful. So I see this all the time, and you probably know who I'm talking to in the room. If you're chasing more and getting your ass kicked, it's because you're spreading yourself too thin. If you're looking for more entries instead of the best entries, if you're holding for the giant moves instead of reading your indicator saying that it's time to get out of the move, if you're trying to trade someone else's plan, it rarely works. I know because I've done it. My biggest butt kickings come in when I try to be John Novak, when he and I go back and forth on Skype, and we start chart reading instead of rule following. That's when I run into problems. I hope that makes sense to everybody. It's not my job to tell you how to trade. It's not my job to tell you when to get in, when to get out, but it is my job to teach you to read your indicators and to put you in a position to have the best chance of success. It is my job to offer a plan that's been proven over and over again to help you find success. And guys, it is my job to give you feedback on each and every trade that you present in this class. I love my job. My job creates successful traders when they follow the plan. And I'm going to do this one more time. Don't tell your personal trainer you want abs if you're not willing to eat healthy, right? Oh, Debbie, happy 40th. Enjoy your vacation. Go soak up some sun, a couple pina coladas. Go remember what got you to that 40-year mile marker. That's amazing. I'm going to miss seeing you in the room, but I'm excited for you. We'll see you next week. Be good. Guys, let your efforts match your expectations. If you say you want to be a professional day trader, then you should be posting your trades in the room. You should be using a spreadsheet. If you say you want to be a professional day trader, you should have a set of rules. And I see everyone jumping ship. Everyone's like, damn it, Mark, I don't want to hear about this. You should have a simple plan. You should be focused. You should be getting feedback on everything that you do. Ronnie Coleman, 8-time Mr. Olympia, used to say, everybody wants to be a bodybuilder. Don't nobody want to lift no damn heavy weights. He's right. There was a big wave surfer said, everybody wants to be a big wave surfer, but nobody paddles out. You have to do the work to get to the results, guys. This classroom is the work. Embrace it. Show me everything you do. And I'm telling you, if you keep it simple, you're going to get to where you want to be. And in that spirit of simplicity, man, you can ask all the questions, PFI. For those of you that are trading this afternoon, trade well, follow your rules. And I will be back tomorrow at 9 a.m.